In the fast-moving world of cryptocurrency, where volatility can shift fortunes in mere hours, Bitcoin has once again demonstrated its remarkable resilience by holding firmly above a critical key support level that has captured the attention of traders, analysts, and institutional investors alike amid ongoing market uncertainty and broader economic pressures. Welcome to this latest market update from Crypto Hub, your premier destination for in-depth professional analysis of cryptocurrency trends, where we deliver timely insights grounded in data and market dynamics to help you navigate the complex landscape of digital assets with confidence and clarity. Today we are focusing squarely on Bitcoin's steadfast position above its pivotal threshold, alongside a detailed examination of Ethereum's performance as we unpack the most recent developments shaping the crypto market on this Monday, April 20th, 2026. Bitcoin is currently trading in the vicinity of $74,000 to $75,000, having maintained its stance above the crucial $73,000 support zone, which many technical analysts have identified as a major psychological and structural floor following recent consolidation patterns. This key level has proven resilient against multiple tests in recent sessions, reflecting strong buyer interest that has prevented deeper corrections despite intermittent selling pressure from profit takers and macroeconomic headwinds. As we delve into the details, it is important to recognize that Bitcoin's ability to hold above this level is not merely a short-term phenomenon, but rather a testament to the evolving maturity of the cryptocurrency market, where institutional participation through spot Bitcoin exchange-traded funds has provided a consistent demand backbone that absorbs selling volume and stabilizes price action. Over the past week, Bitcoin has seen modest gains hovering around the $75,277 mark at times, with a market capitalization exceeding $1.5 trillion, underscoring its dominance in the overall crypto ecosystem, which now totals well over $2.5 trillion when including all major assets. To understand the significance of this hold, we must first examine the technical landscape in detail. On the daily chart, Bitcoin has been respecting an ascending channel formation, with the lower boundary aligning closely with the $73,000 region, which coincides with the 50-day exponential moving average, providing dynamic support that traders have been monitoring closely. The Relative Strength Index, or RSI, currently sits in neutral territory around the 50 level, indicating that the asset is neither overbought nor oversold, leaving room for potential upside momentum if buying volume accelerates in the coming sessions. Meanwhile, the Moving Average Convergence Divergence, or MACD, indicator shows a narrowing histogram suggesting that bearish momentum is waning, while the signal line remains just below the MACD line, hinting at a possible bullish crossover in the near term if price action continues to consolidate constructively above the key support. Resistance levels to watch on the upside include the $76,000 zone, which has acted as a recent ceiling, followed by the $77,500 area, where previous swing highs have met selling interest, and a decisive break above these could open the door to retests of the $80,000 psychological barrier that many long-term holders view as the next major milestone. From a fundamental perspective, several factors are contributing to Bitcoin's ability to maintain this position, even as global equity markets experience mixed signals and traditional safe haven assets like gold fluctuate in response to interest rate expectations. Institutional inflows into Bitcoin ETFs have remained robust, with reports indicating billions in net accumulation over the past month, as pension funds, hedge funds, and corporate treasuries continue to allocate capital to the asset class, viewing it as a hedge against fiat currency debasement and a store of value in an era of expanding global liquidity. The effects of the 2024 Bitcoin halving continue to reverberate through the network, with reduced block rewards tightening the supply dynamics and historically leading to prolonged bullish cycles as scarcity becomes more pronounced. On-chain metrics further support this narrative, with the number of active addresses and transaction volumes showing steady growth, while the realized price metrics suggest that the average cost basis for long-term holders remains well below current levels, providing a strong psychological cushion against panic selling. Moreover, regulatory developments around the world have been largely constructive, with several major economies advancing frameworks for crypto custody and taxation that enhance legitimacy and attract more traditional finance participants, reducing the stigma that once plagued the sector. Shifting our focus to Ethereum, the the second largest cryptocurrency by market capitalization, which is trading around $2,300 to $2,350. As of this update, Ethereum has mirrored Bitcoin's relative stability, but with its own unique drivers influencing price behavior. ETH has been holding above its own critical support near the $2,200 level, which aligns with recent lows, and the 200-day moving average, offering a foundation for potential recovery amid broader market sentiment. The asset's 24-hour trading volume exceeds $16 billion, reflecting healthy liquidity and investor engagement, particularly as developments in the Ethereum ecosystem continue to unfold. Technically, Ethereum's chart displays a similar consolidation pattern within a broader downtrend from earlier highs, but with signs of basing action as the price respects the 2,200 to 2,300 range where buyers have repeatedly stepped in. The RSI for Ethereum is also hovering in neutral territory, providing flexibility for either direction, while the MACD is showing early signs of flattening, which could precede a bullish divergence if positive catalysts emerge. Key resistance for ETH lies at the $2,500 mark, followed by $2,750, where previous supply has concentrated, and a breakout here would likely coincide with Bitcoin's strength, given the high correlation between the two assets, which currently stands above 80%. Ethereum's fundamentals remain compelling, driven by its role as the backbone of decentralized finance non-fungible tokens and Layer 2 scaling solutions that continue to attract developers and users worldwide. The network's transition to proof of stake has long-term implications for energy efficiency and staking yields, which currently offer attractive returns for holders locking up ETH to secure the blockchain, further reducing circulating supply and creating deflationary pressure through mechanisms like fee burns. Recent upgrades and the potential approval of additional Ethereum-related financial products have bolstered investor confidence, even as the asset faces competition from newer Layer 1 blockchains vying for market share. In the context of today's market update, it is noteworthy that Ethereum's performance often amplifies Bitcoin's moves during risk-on periods due to its utility as a platform for innovation, making it a bellwether for the broader altcoin sector, where sentiment can shift rapidly based on narrative flows. When Bitcoin holds key levels as it is doing now, Ethereum tends to benefit from spillover capital rotation, particularly from retail participants seeking higher beta exposure within the crypto space. Broadening our view to the overall cryptocurrency market, we see a landscape characterized by cautious optimism, where total capitalization has stabilized following earlier volatility, with Bitcoin's dominance hovering around 55%, indicating that capital is still largely concentrated in the majors, rather than flowing aggressively into smaller altcoins. Altcoins such as XRP, which is trading near $1.44, have shown modest gains on the day, but remain sensitive to regulatory headlines, while other tokens tied to artificial intelligence or real-world asset tokenization themes are exhibiting mixed performance as investors weigh risk-reward profiles carefully. Macroeconomic factors play a significant role here, with upcoming United States economic data releases on inflation and employment expected to influence Federal Reserve policy decisions, and by extension risk asset pricing, including cryptocurrencies. Lower interest rates would generally favor Bitcoin and Ethereum by reducing the opportunity cost of holding non-yielding assets, while persistent inflation could reinforce their appeal as alternative stores of value. Geopolitical tensions and supply chain disruptions also warrant monitoring, as they can trigger sudden flights to safety that either boost or pressure crypto depending on the prevailing narrative. Delving deeper into Bitcoin's technical setup, it is essential to consider multi-timeframe analysis for a comprehensive picture. On the weekly chart, Bitcoin remains within a long-term uptrend channel established since the 2022 bear market lows, with the current price well above the 200-week moving average, which has historically served as a reliable bull market support. Volume profiles indicate significant accumulation around the $70,000 area during previous dips, suggesting strong institutional conviction at these levels. Fibonacci retracement levels from the all-time high provide additional context, with the 61.8% retracement aligning near $72,000, further reinforcing the key support zone that Bitcoin is currently defending. Should the price experience a breakdown below $73,000, which remains a low probability scenario based on current order flow data, The next major support would cluster around $68,000 to $70,000, where previous range highs have flipped to support. Conversely, sustained trading above 75,600 could trigger algorithmic buying from trend-following models pushing prices toward $80,000 and potentially retesting the psychological $90,000 barrier later in the year if momentum builds. For Ethereum, similar multi-time frame considerations apply with the weekly chart, showing ETH consolidating above its $2,000 psychological floor, a level that has held firm through multiple tests since late 2025. The asset's correlation with Bitcoin remains a key variable, and traders often employ ratio charts to gauge relative strength, with the ETH-BTC pair currently indicating that Ethereum is slightly underperforming but poised for catch-up if decentralized application activity accelerates. On-chain indicators for Ethereum reveal increasing total value locked in decentralized finance protocols exceeding $50 billion and growing usage of Layer 2 networks like Arbitrum and Optimism, which alleviate congestion and lower transaction costs, enhancing the network's scalability narrative. These developments are critical because they address long-standing criticisms regarding Ethereum's throughput compared to competitors positioning it for long-term adoption in sectors ranging from supply chain management to decentralized autonomous organizations. As we analyze the interplay between Bitcoin and Ethereum, it becomes clear that their movements are intertwined yet distinct in ways that savvy investors can exploit. Bitcoin acts as the primary risk barometer for the entire crypto market, often leading rallies or corrections, while Ethereum provides the technological infrastructure that powers much of the innovation-driving sector growth. In today's environment, where Bitcoin holds above its key level, the spillover effect has helped Ethereum avoid deeper drawdowns, maintaining its position as a core holding for diversified portfolios. Investors should pay close attention to the Bitcoin Dominance Index, which, if it begins to decline, could signal a rotation into Ethereum and select altcoins offering asymmetric upside potential. However, such rotations require careful timing as the market remains sensitive to external shocks, including potential shifts in United States regulatory policy under ongoing congressional reviews of crypto legislation that could either accelerate or hinder mainstream integration. Risk management remains paramount in this volatile asset class, and professional traders emphasize the importance of position sizing, stop-loss strategies, and diversification, even when the market appears stable. For Bitcoin holders, defending the $73,000 level, a trailing stop below recent lows could protect gains, while Ethereum participants might focus on the $2,200 support as a critical invalidation point for bullish theses. Broader portfolio considerations include exposure to stablecoins for liquidity management during uncertain periods and monitoring derivatives markets, where open interest and funding rates provide real-time sentiment gauges. Currently, funding rates are neutral, suggesting balanced positioning without excessive leverage that could amplify liquidations in either direction. Looking ahead, the coming weeks will likely test Bitcoin's resolve as it navigates quarterly rebalancing flows, options expirations, and potential news catalysts ranging from corporate earnings reports that highlight crypto treasury strategies to central bank communications that influence global liquidity. Historical patterns from previous cycles suggest that periods of consolidation above key supports often precede breakout moves, particularly when accompanied by positive on-chain signals and institutional accumulation. For Ethereum, the focus will remain on ecosystem metrics such as gas usage, developer activity, and the rollout of further upgrades that enhance interoperability with other blockchains. Both assets stand to benefit from increasing mainstream awareness as more financial advisors incorporate crypto into client allocations, and educational initiatives demystify the technology for retail audiences. In synthesizing this analysis, it is evident that Bitcoin's hold above the key level represents a constructive development that bolsters confidence across the cryptocurrency space, while Ethereum's steady positioning underscores its enduring relevance as a foundational protocol. The market update today reflects a maturing industry where price action is increasingly driven by fundamentals rather than pure speculation, yet volatility persists as a defining characteristic requiring disciplined approaches to trading and investing. As always, participants should conduct their own research, consider their risk tolerance, and stay informed through reliable sources to make decisions aligned with their financial objectives. The interplay of technical factors, fundamental drivers, and macroeconomic influences creates a dynamic environment where opportunities abound for those who approach it with professionalism and foresight. Expanding further on the historical context, Bitcoin has traversed numerous cycles since its inception, each characterized by distinct phases of accumulation, markup distribution, and markdown. Yet the current phase following the 2024 halving echoes elements of prior bull markets, where support levels held firm amid skepticism before catalyzing significant advances. The $73,000 area echoes the role played by previous psychological barriers, such as the $20,000 level in 2023 or the $3,000 level for Ethereum in earlier years, where buyer conviction ultimately prevailed, leading to new highs. This pattern is reinforced by the stock-to-flow model, which continues to project upward trajectories for Bitcoin based on its programmed scarcity and the diminishing issuance rate post-halving events. Analysts who subscribe to this framework argue that the current consolidation is a healthy pause, allowing the market to digest recent gains before the next leg higher, potentially targeting levels not seen since the 2025 peak if adoption metrics continue their upward trajectory. On the Ethereum side, the network's evolution from a simple smart contract platform to a comprehensive, decentralized computing environment has been nothing short of transformative, with the Shanghai upgrade enabling staking withdrawals and subsequent developments focusing on danksharding and proto-danksharding to improve scalability. These technical advancements are not abstract concepts, but practical improvements that directly impact user experience and economic incentives within the ecosystem. Staking participation rates have climbed steadily, with over 30 million ETH locked in validators, generating yields that compete favorably with traditional fixed income products in a low-rate environment. This staking dynamic creates a self-reinforcing loop, where higher participation secures the network further while reducing sell pressure from short-term holders. Combined with the burn mechanism introduced in prior upgrades, Ethereum's supply has entered a deflationary regime during periods of high network activity, providing a counterbalance to issuance and enhancing its value proposition relative to inflationary assets. Market sentiment indicators derived from social media analytics, fear and greed indices and options skew all point to a cautiously bullish outlook in the short term, with the fear and greed index residing in the neutral to greed zone, reflecting improved investor psychology following Bitcoin's defense of support. However, it is crucial to temper optimism with realism, as external variables such as potential escalations in global trade tensions or unexpected regulatory announcements could introduce downside risks capable of testing even the strongest supports. For instance, if broader risk assets experience a sell-off due to disappointing economic data, Bitcoin could see temporary pressure toward the $70,000 region, though historical precedent suggests quick recovery given the depth of institutional backing. Ethereum would likely follow suit, but its performance could diverge positively if specific news such as major protocol partnerships or decentralized finance milestones captures market attention. To provide a more granular view of potential scenarios, let us consider three plausible paths forward based on current data. In the base case scenario, Bitcoin continues to consolidate between $73,000 and $76,000 for the next 2 to 4 weeks, building a stronger base before breaking higher toward $80,000, supported by seasonal tailwinds and continued ETF inflows. Ethereum in this scenario would trade in a $2,200 to $2,500 range, with occasional outperformance during risk-on days. In a bullish case, a decisive close above $77,000 for Bitcoin on strong volume could ignite a rally toward $90,000 by mid-year, drawing in fresh capital and lifting Ethereum toward $2,800 as altcoin rotation intensifies. Conversely, in a bearish, albeit less likely scenario given current indicators, a breakdown below $73,000, triggered by external shocks, could see Bitcoin retest $68,000, prompting a more defensive posture for Ethereum around $2,000 until sentiment stabilizes. These scenarios are not predictions, but frameworks for preparedness, emphasizing the importance of adaptability in a market defined by uncertainty. Institutional involvement deserves additional emphasis as it represents a structural shift that differentiates the current market from previous cycles. Major asset managers have publicly disclosed substantial Bitcoin allocations, with some reports indicating that over $100 billion in institutional capital has entered the space through regulated vehicles since the ETF approvals. This capital is less prone to emotional selling and more focused on long-term portfolio diversification, providing a stabilizing influence during periods of retail-driven volatility. Corporate adoption stories, including public companies adding Bitcoin to balance sheets, have further legitimized the asset class, creating a virtuous cycle of awareness and demand. For Ethereum, institutional interest manifests through exposure to decentralized finance protocols and Layer 2 solutions where yield-generating opportunities attract capital-seeking alternatives to traditional markets. As more sovereign wealth funds and endowments conduct due diligence on these assets, the foundation for sustained growth strengthens even if short-term price fluctuations test investor resolve. Regulatory horizons also warrant close attention, with developments in key jurisdictions influencing global flows. In the United States, ongoing efforts to clarify the regulatory status of digital assets through bipartisan legislation could provide much-needed certainty, boosting institutional participation, while the European Union's markets in crypto assets framework continues to set standards for compliance and consumer protection that other regions may emulate. In Asia, selective approaches to licensing and taxation have created pockets of growth, particularly in stablecoin usage and cross-border payments where cryptocurrencies offer efficiency advantages over legacy systems. These global dynamics collectively contribute to a more robust infrastructure for crypto markets, reducing the likelihood of extreme drawdowns and supporting the type of consolidation we are witnessing with Bitcoin above its key level. As we conclude this comprehensive update, it is clear that the cryptocurrency market remains in a phase of constructive development, where Bitcoin's ability to hold above its key support level serves as a foundational pillar for broader optimism, while Ethereum's technical and fundamental attributes position it for meaningful participation in any ensuing rally. The data-driven analysis presented here underscores the importance of viewing current price action through a lens of historical precedent, technical rigor, and fundamental strength, rather than short-term noise. At CryptoHub, we remain committed to delivering these professional insights with the seriousness and depth they deserve, empowering our audience to engage with the market thoughtfully and strategically. Thank you for joining us today, and we look forward to bringing you the next installment of market updates as the crypto landscape continues to evolve. Stay informed, stay disciplined, and we will see you again soon on Crypto Hub, where the future of finance is decoded one update at a time.